Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very beautiful week. And in today's markets, guys, well, it was a quite action-packed day in the markets, depending on which stocks you were trading. We first had a bit of news this morning in terms of the non-farm payrolls jobs report that came in very, very good, a lot better than expected. So in today's video, guys, we're going to take a look at that first. Then we're going to dive into more continuation on the GameStop saga. Today, we had a few key elements. GME obviously releasing their earnings report 3 days prior to when they were supposed to release it next Tuesday, but came out and released it this morning quite unexpectedly. And they also did raise capital by offering and selling more shares into the open market. So we're going to take a look at GME's earnings today, coupled that with Roaring Kitty's live stream and a couple of little elements on what he had to say today. Very action-packed news day today, guys. Everybody was talking about that live stream, whether it was on Reddit, YouTube, or even the mainstream media were tuning in to Roaring Kitty's live stream. So very, very interesting day to say the least. Thereafter, guys, we're going to do our major technical analysis rundown in terms of our major indexes and our big tech names and wrap it up with my portfolio review. Now, in terms of the subscriber requests, guys, I didn't forget you. I have a lot of them, about 12, 13 of them right now. And since it takes me about at least 1 to 2 minutes to do each one of these, just because I want to be, in depth, right? I don't want to go over a chart for 15, 20 seconds. I really want to give it about 1-2 minutes each. I'll be doing a separate video tomorrow. And the reason I'm doing it in a separate video, guys, is because I'm really trying to optimize the time of these daily market recaps. I really want to keep them between 30 and 40 minutes long. Seems to be what the algorithm pushes the most. So just for the sake of growth of the channel, guys, if I do these every Friday, it's going to really add like an extra 30, 40 minutes on top of the videos. And it's going to make them maybe a bit too long for most people. I know I leave the timestamps down below in the description, but you know how it goes, right? When you see an hour-long video, you may not want to click on it. So moving forward, I will be doing the subscriber requests and I'll be pooling all of them throughout the week and doing one video every single Saturday. Usually I don't do videos on Saturday, but I will do them moving forward, and it will be the time slot for all of the subscriber requests. So hopefully you guys understand. And to conclude the video, guys, we're going to do obviously a portfolio recap and see how I ended the week trading. So without further ado, guys, let's get right into today's video. SPY down about 0.12%, QQQ down about 0.09%. It was a really topsy-turvy day, guys. We started the morning very nicely in the green, breaking new all-time highs, and then rolled into a little bit of consolidation into the afternoon. Healthy consolidation, to say the least, guys. No real red flags. Keep in mind, we do have 2 major market-moving events next week, CPI and another meeting with Jerome Powell. So next week is going to be the week for volatility, but it's nice to see the bulls have created a lot of space now off of the lows to really potentially absorb those events if ever they don't go the way that we are planning. Now, moving into the heat map, guys, we can take a look at our company sectors, and I don't know why my chart is glitching out, so let's refresh the page here. You can see there was a fairly mixed market day, to say the least, right? So a lot of big tech names were fairly mixed. So Microsoft in the red, Apple green, Google, Meta down, Amazon down, NVIDIA down. Really mixed day in terms of our big tech sector. However, the highlights were in healthcare and banks. They actually did have a very nice performing day. The bottom half of the market, guys, not having the best day, right? You can see here very, very mixed sentiment in the markets. Just a little bit of a cool off day to recap the week. Now, in terms of the one-day relative performance here, guys, you can see how mixed the market was today. Even though we did have quite a few names green, a lot of the big ones were red. So really the only gains to be had across the market today, technology in the green, ever so slightly. Financials and healthcare here, a little bit in the red, which is very funny here because in terms of your indexes, right? I'm not too sure how they measure this one right here, but I get these anomalies every now and then. It says financials and healthcare are negative, but on a relative basis, when we look at their specific ETFs right here, maybe XLF and XLV don't encompass all of the names that FinViz is maybe encompassing in their analysis, but pertaining to the ETFs of XLF and XLV, they were actually netly green on the day. So a little bit of a confusion there, but there was some healthy rotation across healthcare and across financials to end the day. So those should be green. The bottom half of the market, though, guys, really not having the best day, which leaves us with really a mixed performance across the week. Technology, healthcare, communication services, cyclicals, all in the green, but then you had pretty much a counterbalance in red, and at least the sectors that were the most red do represent the smaller sectors of the market. So that's why we had a net move up, guys. It's really your bigger components of the market that did a good job pushing us up this week. So Let's now jump in directly to our non-farm payrolls report and see exactly what happened. So here's the non-farm payrolls, guys. US adds a much better than expected 272,000 jobs in May, but the unemployment rate edges up to 4%. This may seem bad here, guys, but when I pull up a chart, you will see it's really not that big of a deal. So here we go. Here was the expectation, right? Non-farm payrolls expanded by 272,000 jobs for the month, up from 165 in April. Very, very good. And well ahead of the estimate from 190,000. So huge beat on jobs, guys. That's obviously very good for the economy, but it doesn't really give any hint to the Federal Reserve that they have any urgency to cut interest rates, right? So a little bit of a double-edged sword right there. Unemployment rate rose to 4%. Now, here's a good point. Average hourly earnings were higher than expected as well, rising 0.4% on the month and 4.1% from a year ago. This is good because wages are now outpacing inflation. So you are getting richer and richer every single month, guys. If your salaries are indexed to inflation with this most recent wage growth, we are now above. The wage growth is outpacing inflation. So finally, consumers are regaining purchasing power. Slowly, albeit, however, they are regaining. Now let's take a look at the monthly job creation. You can see we're pretty much well in line, right? Even though we did have a slight decline here from 2022, still really in line with the last year's worth of data, right? So not that bad of a read at all. When you take a look where the jobs were added here, guys, the jobs are really added streamlined. There was a big a big negative sentiment in the markets a couple months ago, and people were saying, most of the jobs were only being added in healthcare and the government. Well, take a look at this list right here. As a matter of fact, now the jobs creations are a lot more broad. A lot of jobs in goods producing, 25K, 204K in services. Healthcare was a large component of that, but you also had very decent gains elsewhere too, right? Transportation and warehousing, financial services, professional businesses, private education and health as well, leisure and hospitality, a big one. So very, very broad in terms of your job creation, and government did add another 43,000 jobs. In terms of the unemployment rate here, guys, well, if you go back all the way to the 1950s, you can see where we stand right now. 4% is towards the lower end of our historical reads. Now, if you were to kind of zoom into the last, let's say 25 years to be a bit more relevant, well, as a matter of fact here, guys, we're really low, right? Prior to the Great Recession in 2008, unemployment rate was really between 5 and 4%. Even here, right, it took a long time after this recession for the unemployment rate to steadily come down. But, even as of 2015, 2016, 5%, 4%, right? So really, when you get into the lower 3%, those are pretty much the lowest reads on unemployment in the history of the US economy. And sitting right now here at 4%, yes, we are a bit more elevated than February of last year, December of last year, right? 3.5, 3.6, but still 4% in the grand scheme of things, guys, even though it's on a slight little uptick, really not that big of a deal in my opinion. So all in all, guys, a very good jobs report. But as I said, double-edged sword, right? If you're looking for the Fed to really cut interest rates in a very quick manner, well, they're going to need to see a lot more negative data than that. And so far, so good, guys. The economy is still growing at a steady pace. Jobs are still increasing at a steady pace. So the Federal Reserve, even though they know that eventually they will have to decrease interest rates, because the last thing they want to do is crush the economy by keeping rates too high for too long, right? But now this most recent set of data, we'll hear from Jerome Powell next week, of course, but this most recent set of data could just be a case in point for the Federal Reserve to maybe only cut once or twice this year, starting potentially as soon as September and maybe November. Nothing really has changed there. That's been the expectation now for about the last 45, 60 days. So moving on from there, guys, let's now tackle something fun, and we're going to do GameStop earnings. So GameStop, after the close yesterday when we were doing the video, right, got all the way up to $64. And then in the pre-market, something happened. What exactly happened, guys? Well, GameStop came out with their earnings pretty much at 6 o'clock in the morning, and the rest is pretty much history, right? Roaring Kitty kind of came online at 12 p.m. And the expectation, going into this, guys, there was really one of two ways to play it, right? Either it was going to be a sell the news event, pretty much a very, very hyped up event that then kind of maybe marks the top of a move. And that's pretty much what happened. But it could have also went the opposite direction, right? Depending on Roaring Kitty's rhetoric during his video and depending on the sentiment, it could have also potentially made us rise a little bit too, right? So really the direction of the stock movement after the live stream, guys, was really anybody's guess, right? Truly, truly, truly anybody's guess. But for now, it does appear that it was a little bit of a sell the news event. GameStop now down about 40%. So in terms of their earnings, guys, let's look into the bit of their earnings, right? So in terms of their earnings, they had a bit of a decline here on EPS by about 33% on a miss. And they did have a slight miss on revenue here as well by about 11%, right? No secret there. So before we get into a bit of valuation, before we get into the articles, guys, I just want to go over the Roaring Kitty live stream because it was definitely an event to watch. So here was the live stream. He started off, right? We're going to not put the sound on this. He started off in a very fun manner, right? Just showing a lot of memes of cats, right? Because obviously his name is, Roaring Kitty. So he started off with a little 1-2 minute video segment. He was 25 minutes late to the live stream, which did contribute to the stock moving down a little bit while he was preparing for the stream, essentially. And then when he came on, he kind of looked like this, right? Very, very funny. His arm in a little bit of a splint rather, bandages everywhere, pretty much, basically just putting on a comedy show, right? And he was really playing the part of an average Joe, not hinting at his prior career as a financial analyst, which a lot of people don't know, and just kind of playing into the narrative, playing into the themes, and obviously being very careful about what he was saying on stream so that none of it would be construed as financial advice. A couple people were asking in the comment section, do you have a lawyer next to you right now? And he said pretty much no. So he was pretty much just joking around for a lot of time, saying it's nice to be back and everything. And then he did get into his actual thesis about the company, right? And then saying pretty much that he really supported the CEO, Ryan Cohen, and said that he was doing good things. But he did also say that GameStop really needs to rearrange their business model and potentially start attacking some of that digital media segment that they've been trying to go after for the past 2 years. So Roaring Kitty does believe in the stock, and he did showcase the portfolio. The stock got halted at least about 6 or 7 times during the live stream. And what his only slip up, guys, which could be construed as a potential market moving thing that came out of his mouth, right? His only mistake was when he said the stock was dropping while he was talking. He said, "Oh no, I think whatever I'm saying is causing the stock to drop." And really, in his position, somebody in that position, you cannot say that, guys. That is a definite no-no, right? So a little bit of a slip up on his part, but all in all, fairly good. And then when the stock was halted, he said he wanted to show a portfolio update, but you can see the stock was eventually halted, and he said, "Wait, I'm gonna wait until the stock gets unhalted to show the portfolio." And there it is, right there, guys, showing the portfolio live for everybody to saying, yes, it's E-Trade. I've seen the headlines throughout the week. I'm checking into my account every single morning, wondering if they've closed my positions or not. So a little bit of a shout out to E-Trade there. All in all, guys, it was a fairly fun stream. We really didn't learn anything new about his thesis or whatnot, guys. Pretty much the same thesis as last time. He did not address the short squeeze at all. That would obviously be a big no-no. He just dove into his fundamental belief in the company and that the company could potentially recover in the future. And he flat out said, this is a YOLO bet, right? So really not giving any financial advice or anything like that. All in all, a very, very nice stream to have. Been nice to see him for the first time in 3 years, right? Now let's dive into some of the numbers here, guys. So GameStop shares drop after retailer posts 29% sales decline, reveals stock sale plan. Okay, so let's move on. The company on Friday posted net sales of $881 million, down 29% from the $1.237 billion a year prior. So down a little bit. The sales decline was steeper than the 2 Wall Street analysts who cover the stock. Now, the expected sales were between a range of 900 to 1.09, so coming in well below the consensus as well. Now, the GameStop lost $32.3 million during the quarter, a narrower loss than the $50.5 million suffered in the year ago period. So they're still losing money, guys. In terms of the quarter-over-quarter performance, in terms of GameStop, it is fairly inconsistent. As you can see down here, bottom right, some quarters, they barely make money, $30-40 million. Some quarters, they barely lose money, right? $3 million, $2 million, Q1 of 2023, $50 million. So really doing a good job of managing the costs and trying as much as they can to keep the losses small, keep their costs under control, and keep the business running for as long as they possibly can, right? So all in all, very good. You guys know me, right? I'm a fundamental guy as well. And you just got to call it as you see it, right? The company, obviously, everybody knows, guys, it's struggling, right? That's not the point. The point is, can they recover? So you can see they had very, very deep EPS losses in the past couple of years. And now the EPS is ever so slightly neutral to slightly positive, which is a net improvement, right? We got to look at the positive sides, can't only focus on the negatives. In terms of revenue, yes, revenue is declining, but still forecasted to be roughly around the $5 billion mark. It's not as if revenue is evaporating to zero, right? So they still do have a decent amount of revenue and still do have a decent amount of cash runway to eventually make some plans, some concrete plans to potentially acquire maybe one or two competitors and really start attacking the digital landscape of the gaming sector, right? So that is what they're trying to do. Now let's continue in the article. So the company also gave an update on its ongoing stock sales, saying it would sell an additional 75 million shares on top of the 45 million share sale it had announced in May that raised more than $900 million. They sold 45 million shares at $20, guys, after this tremendous move back in the month of May, right around here. That is when they did their initial sale offering to raise some cash. As a matter of fact, it must have been closer to this area right here, right at $20. They disclosed that it was worth about $900 million. The one they did today for $75 million, they did not divulge what price they were able to sell the shares at. So take your guess, guys. We'll know eventually, but it's anywhere within this range, right? Anywhere between, $36 and about $28, which is your day's trading range right now, right? Obviously, they can't sell shares in the pre-market, being a publicly listed company. They can only sell when the market is live. So pretty much take your pick, guys, $38 to about $28. They sold shares at a certain point during the day in that price range. We'll get the final results probably in the next 2 weeks when they disclose it. Now, the first quarter results came as a surprise. The company, which would be the subject of a YouTube live stream by Keith Gill, better known as Roaring Kitty Friday, was supposed to release earnings on the following Tuesday after the bell. So that's what we were saying. They're supposed to release earnings next Tuesday, but they did it today, right? Maybe trying to benefit from the hype around the live stream. Very, very smart business decision, right? Now, obviously, guys, this is a dilutive event. And even though the company released earnings today, which was negative for the stock price, they announced further dilution, which is negative for the stock price. Guys, if you're the CEO of a company, if you're management of a company, the shareholders are at heart for you, right? They are your main interest, but your primary focus is having enough money to keep the business running. So when you see a positive event like this, increase in share price, you have to do it, guys. I know a lot of people are potentially angry at GME for doing this on this day, but they have to do it, guys. It's a business decision. If you want the business to survive, they have to take advantage of these high volume events to be able to raise capital. That is the point of a business, to stay alive, raise capital either from the bond market, which they can't do because they're pretty much net income negative right now, and also from shareholders. And this time they chose to go with the shareholder capital raise. So bit of a double-edged sword event once again, right? Now, in terms of the valuation, guys, right? So obviously we know that the company is or has been struggling. It's been doing a lot better than it was doing pretty much in 2019 and 2020 in terms of their net income. Now, in terms of the actual numbers of the company, let's take a look at this. Let's see how much cash runway they have to survive, right? So cash and cash equivalents and marketable securities were about $1.1 billion to close the quarter. Long-term debt remains limited to a low-interest, unsecured term loan associated with the French government's response to COVID-19. They don't have that much debt here, guys. Let's take a look at that debt, right? So total assets right now is about $2.587 billion. This does not include both of the capital raises. This report is dated May the 4th, so we do not have both of the capital raises, which together raised about $2.5 billion. So we're going to have to add that to total assets in a little bit here, guys, right? So that is the gist of the story that I wanted to show to you guys. This is important because we want to derive their price to book value. Since the company does not have positive EPS or much EPS growth, we can't value them on a traditional price to earnings ratio. We have to value them either with price to sales or price to book right now. So in terms of price to book, very, very simple, guys. At $28, it's very, very simple. All we do is divide their yearly total sales number, which is last year was about $5.27 billion. We divide the market cap right now at $28 of about $8.64 billion right here by their total sales of last year, 5.27, gives them a price to book of 1.63. That's actually not too bad, guys. It's not extremely undervalued, right? Undervalued would be pretty much under 1 price to book, but 1.63 in the grand scheme of things, guys, it's not that bad. A lot of your favorite companies run price to book ratios, 4, 5, 6, 7, 8. So for GameStop to be only 1.63, it's not that bad, right? But it just also goes to show you that the valuation multiples that Wall Street is allowing this company to trade at before beating it down is not that high, just because the company's growth prospects are still a bit uncertain. Now, in terms of the price to book at $28, I derived a 2.01 price to book, which is actually not that bad, guys. Price to book anywhere between 1 to 2 is okay, to be quite honest with you. A lot of your favorite companies right now at the same time, they trade price to book 4, 5, 6, even 10 sometimes for a lot of your favorite technology companies. So out of 2, it's not that bad. And the way that I derive this, guys, since we had their total assets, which were reported in their balance sheet right here, 2.587, we just take those total assets that they already have right there, right? Then we add the amount of total shares that they got. So we know how much they got with the 45 million. It's about $900 million. Now I estimated that the 75 million, I don't know, guys, what share price they got. I derived a $25 average amongst both sales, which I feel is quite conservative, right? Depending on the price action today, it never really got, $28 at the end of the day. I pretty much think that the company did this capital raise early on in the morning, closer to the high 30s. So $20 for 45 million shares, and maybe 37, 38 for $75 million shares. This average should probably be closer to 28, 29, but I'm going with 25 just to be conservative, right? Which means that if I go a little bit more aggressive, this number gets even better. So with the share offering, that's about $2.5 billion of extra cash. If they were to pay off their $800 million in debt that they have right now, that would give them $1.7 billion in net new assets from the cash raise. If we erase their entire debt liability right here, which gives them total net new assets of $4.3 billion roughly. So all we do here is divide their market cap, right? 8.6 divided by your 4.3 pretty much. That's what gives you your 2 price to book. So all in all, not that bad, guys. In terms of the technicals, well, you guys know the drill. It's insanely tough to do technical analysis on a chart that moves like this, right? With so much retail interest, with so many people shorting, right? So much momentum. This one is purely momentum driven. As of now, I really do like the $22 level as a floor. And obviously you guys know that most of Roaring Kitty's position is down here. So it's going to be very, very tough for the institutions to crush this area, because I do believe a lot of retail will support this location right here. So that could be a nice little trade opportunity, guys. If you want to take the risk, obviously not financial advice. You guys know the drill with this company, right? If you want to take the trade, it is all on you. I'm just saying pretty much how I view this one. Could we potentially see some further run up with as we get closer and closer to Roaring Kitty's call expiration, which is pretty much pretty much 2 Fridays from now? Yes, very possibly, right? As a matter of fact, I think it is next Friday, right? Yeah, it is next Friday, as a matter of fact. So that should be a fairly 2 Fridays from now. My bad, guys. Looking at the wrong dates down here. So all in all, guys, could potentially benefit from some increase in rally. And I am giving him the benefit of the doubt. I am having a fairly long leaning bias, but obviously, guys, this stock could pretty much unravel completely, and it would not surprise me as well. But just because of the sheer amount of momentum and the sheer amount of attention that this stock has right now, I truly do believe that we may be able to revisit the $30, maybe even $40 levels quite conservatively, right? So that's just a little bit of data for you guys in terms of game stocks. Hopefully you appreciated that. Now moving into the S&P 500 right now. So moving into our technical analysis portion of the video, S&P pretty much holding up where we were, right? Still in a very nice daily uptrend. Any move lower, just going to be looking for a higher low, anything above 523.03, looking for the higher low for the further trend continuation. I apologize. I erased my my green box. That green box of consolidation should be the one right here. Prior all-time highs, right? So still netly above it. And we are pretty much above our top end range of consolidation as well. So a lot of fallback area for the bulls to potentially be had even next week, guys. Even if for some which reason CPI is bad, Jerome Powell is hawkish, right? A lot of space. Even if we set up for the daily downtrend in here, just going to be looking at that point for potential furtherance of weekly consolidation, looking for a weekly higher low, anything above 519, weekly higher low for potential further trend continuation. But the way this week closed, guys, and the weekly uptrend, I do believe that momentum will continue at least into the early portion of next week. No real red flags to speak of just yet. Now moving into QQQ, same analysis pretty much, right? Very gorgeous daily uptrend right now. A little bit of consolidation, just going to be looking for a higher low, guys. Anything pretty much above 451 right now, just looking for that daily higher low for further trend continuation. The 12 EMA is right there, which is in line with your previous all-time high range of support. So it could be a first area of retouch for the bulls, maybe for another next leg higher. If ever the markets do fall apart, same analysis as the S&P, right? Markets looking very good on QQQ. Weekly higher low is set right here, 44.42.59. Looking very good. Any consolidation maybe next week. Just going to be looking for that weekly higher low for a potential further trend continuation. All in all, guys, not looking too bad. The bulls do have a lot of space to work with here. And the monthly charts just paint the beautiful picture with the monthly close of May last week, right? Looking excessively good here, guys. No real red flags for your markets just yet. Moving into XLF financials right now, putting in a nice green day, 0.46% to the upside. Now, tightening range, right? We're still not breaking out of the top end, still not confirming this daily uptrend. That is what you need to see from the bulls here. Daily uptrend break. What will that signal? That will signal that the weekly higher lows are set, and then we're potentially due for a next leg of weekly move higher. Now, take a look at this 12 EMA, guys. 2 weeks in a row, the markets refuse to close below the 12 EMA. 12 EMA has been a great line of defense on the weekly ever since the rally started in November, and I do expect that to continue. So as long as the market leans bullish, I do expect this to break to the upside. Now, if ever, same reason as the SPY and QQQ, if next week is a bad week in terms of data, and we flush these lows right here, 41.02, daily downtrend is resumed, and then we look to our weekly, guys, to desperately protect 40.74. Now, the fact that we haven't really set any new highs, even if we do push a bit lower, guys, this is still one same weekly move down, and the weekly higher low is right here, 40.2. So still a decent amount of space for the bulls to really react from this red box. Previous all-time high area of resistance, now acting as decent support. So I do believe the bulls still do have a little bit of margin of error here. All in all, not looking too bad. Moving on to XLV, what a monster recovery. 100% engulfing move on XLV, looking fantastic, guys. As soon as this move tops out, looking for a daily higher low for the daily trend continuation. Area of confluence could be down here, prior area of support. Prior area of support, going to be a new area of support as well. And look, we have a bit of confluence here. The 12 EMA is there. The 26 EMA is curling up into here. So it could be a very nice location for the bulls to tap and then potentially rise again, looking very good on this 100% engulfing move. And now your weekly higher lows are set, guys. So weekly downtrend, nice 70%, 80% retracement up. And now we have the weekly higher low set and looking for the weekly trend breakout. No close above the highs, so still not an official weekly new uptrend, but any move higher next week, guys, will really solidify this as your weekly uptrend. And the next level of resistance, obviously your all-time high is 148.60. Moving on to semiconductors right now, not too bad of a day on semiconductors, guys, down about 0.08%, but still a lot of space to work with here, right? So daily uptrend clearly underway, looking for a daily higher low, anything pretty much above 239.50, going to be looking for that daily higher low for the further trend continuation, looking very good. Target maybe your 12 EMA as a potential area to tap and then maybe run using this prior range of resistance as support with that 12 EMA. Now, if ever for some which reason semiconductors roll over and set a daily downtrend into next week, you guys know the drill. Just going to be looking for a weekly higher low, anything pretty much above all the way down here, 199, guys. Just looking for a weekly higher low for further trend continuation. All your prior all-time high resistance is right here. The 12 EMA is right there as well. So coming back down, retesting this area, and running could be a likely scenario in the event the markets take a little bit of a breather after some bad data. Now, moving on to IWM Russell. IWM also moving to that down, right? So daily downtrend currently underway on the Russell, and the Russell still trying to find its weekly higher low. Anything above 191.60, just looking for that weekly higher low for the potential trend shift to the bulls. The one reason that I do believe that the bulls have a very good chance of getting this is your yields, although they did have a very big uptick today after your jobs data, right? The jobs data pretty much pushed back any expectations for rate cuts, but that's okay. Big move down, looking potentially for the daily lower high and maybe continuation of the daily downtrend. We are now in a weekly downtrend as well. Just remains to be seen. Can the bears really do a good job of continuously pushing these yield expectations down? So what we'll need to see next week for these yields to continue dropping, guys, we need to see CPI pretty much coming in line. If CPI comes in better than expected, it's going to be really good for the economy, really good for the Fed, right? So what we need to see is CPI come in line or a bit lower than the estimate, right? That will really tilt the Fed's hand in saying, okay, we may just be able to bring rates down. You guys know the drill, right? Every time we have a hot jobs report, yields go up. Every time we have a good inflation report, yields go down. So it's really just a game of cat and mouse right now, right? Nobody really knows. We still don't have much clarity on the direction of interest rates, or at least the timing of that first interest rate cut. So that is when I do believe this is going to drop. Next week after CPI, and Jerome Powell will probably have more indication or more clarity on that when that rate drop will come. And I do believe those two things, if CPI is bullish and Jerome Powell also is bullish, that will contribute to bringing these yields further and further down, which may give you that pop that we're looking for in the Russell. And fittingly, we're approaching the area that it may pop from, prior big area of support, huge resistance for a year and a half, support for the bulls right now, looking for the weekly trend change attempt. Now, moving on to the Dow Jones. Dow Jones also bit of a red day today, 0.22% to the downside. And the Dow Jones, guys, is it rolling over? Is it not rolling over? Well, we're battling with the moving averages, guys, not able to get above them. And now we're maybe losing the hourly trend, almost, right? So if we roll this over into next week and lose the hourly, that will be the end of our daily move up. And we'll be looking pretty much at that point if the bulls can save these prior lows. Now, the size of the bounce is crucial. As of now, the size of the bounce is 50%, a decent bounce, but not as decent as if we would have got up to 61.8 and even the 78% bounce, right? This gives the bulls 50% odds of being able to reset the daily into an uptrend, but it doesn't give them 60% odds or 80% odds, right? That's how I look at these things. So now what we'll need to see from the bulls is they need to set a daily higher low, anything pretty much above 38,000, set that daily higher low and give me the daily uptrend. If we get the daily uptrend, then you will know that your weekly consolidation is finished and that we're maybe looking to make a weekly trend change attempt for the bulls. Target support right here, guys. This is where we really need to see the bulls put a stop to the bleeding. 38,600 down to about 38,300, looking for that daily higher low and then the eventual trend change. So that's pretty much everything for our daily market rundown for your indexes. Now let's jump right into our major tech names. So major tech names, Apple, 1.24% to the upside, looking very good here, guys. Apple, I think the Apple event, as a matter of fact, is next Monday or Tuesday. As a matter of fact, let me just see, Apple shareholder conference, June. Let me get you guys the exact date. My bad for not doing that earlier. Can I see it right here? I don't want to spend too much time on this here, guys. June 10th through the 14th, right? So that should be, as a matter of fact, yeah, next Monday it starts. So Apple event next Monday, going to be very, very interesting for the company, right? So daily uptrend currently underway right now. They tried to set the daily higher low, trying to go for the trend change, but the daily higher low right now is very, very close. So if we fail, double top and roll over, it would be a daily downtrend, guys, and we would be looking for potential weekly consolidation in Apple stock. So we'll see next week if the event is a sell the news event or buy the news event, because you guys know I've been saying it on the channel all week. This is when Apple is unveiling their new AI suite of products, MacBooks, iPads, and iPhones. If the AI technology is very, very good, it could lead to a massive consumer upgrade cycle. A lot of people who have maybe been holding older devices maybe for the past 2-3 years, not seeing much interest in upgrading to the newest iPhone, the newest MacBook, the newest well, they haven't done a new iPad in 2 years, but you guys get the drill, right? If they release a brand new suite of AI products that people really, really like with a lot of improvements in functionality, then expect a very big upgrade cycle for Apple coming as soon as September when they release these phones. And as a result, it's really going to do a great job in boosting Apple's revenue, which has been fairly flat over the last 5 quarters. That being said, guys, we're approaching all-time high resistance. We're pretty much in it right now, all the way up to about 198, but really no red flags for the bulls right now, in full control of everything. So pretty much everything's going to rely on that investor conference. If it's extremely bullish, guys, I do expect a breakout of the all-time highs. But if it's a little bit underwhelming, you may just see Apple retrace a little bit and start heading down to set the weekly higher lows. Mid 180s would be the swing trade location for me. Now moving into AMD. AMD closing the week fairly well, 0.65% to the upside, 168, still no clear break of this wide range of consolidation, right? AMD's really been trapped here for about 3 weeks, but at least we're not breaking it to the downside. What is this area, guys? This area is your prior all-time highs. Sorry, you can't see it that well. Prior all-time highs. It was the lows of this range of consolidation in January and February, and now we're using it again, right? Trying to go for the weekly trend change attempt. So what we're doing right now, we're trying to set the new weekly higher lows. Anything pretty much above 142.37, we'll just be looking to set those weekly higher lows for pretty much the weekly trend change. All in all, not looking too bad at all for AMD, but we still need to do one thing first. Give me the daily uptrend. At least we're above all of our moving averages right now, looking fairly good. If we can get that daily trend change into next week, your first stop is going to be this range of resistance, 172.50-ish, and then we're pretty much going all the way up to about 182, 183. Not that bad at all, guys. I'm still very interested in playing AMD. Short puts, 160 to 150 all day. Moving on to Amazon right now. Amazon really having a nice end of the week here, even though they're down 0.38%. Look at this week's move. Very, very nice week for Amazon, right? So daily downtrend was heavily underway. Fully engulfing move by the bulls. So now eventually when this move is topped out, going to be looking for a daily higher low to be set. Keep an eye on your moving averages, going to provide a first area of support. And then pretty much anything above 173.88, guys. Just looking for that daily higher low for further trend continuation. Looking very good. They did not lose the hourly trend just yet. Double bottoming right here. So I wouldn't say we're in for daily consolidation just yet. They could save this on Monday. Even though we lost the 12 EMA on the hourly, they can still do something like this on Monday and it would not surprise me, right? So until we get that hourly confirmation to the downside, that is when we know that the daily downtrend, the daily consolidation is underway, looking for a daily higher low. The moral of the story, guys, if we get this daily higher low attempt early next week, I will be playing short puts on Amazon once again. 180, 175, anywhere within this range, I do believe is a very nice location for a little bit of swing trade on Amazon. Moving into Google right now, Google down about 1.35%, daily downtrend, engulfing move. And now what we're looking to do, guys, is set up for a daily higher low for the daily trend change attempt, right? It was a daily downtrend here. We're trying to reverse that back into a daily uptrend, playing with the 12 EMA right now as a support under us, right? But for if ever which reason we lose this into next week, set up for a daily downtrend, no problem at all, guys. Google just going to continuously set weekly consolidation underway. Anything above 165.18, just looking for that weekly higher low for the weekly trend change. No real red flags, in my opinion, on Google. Personally, myself, I will be looking to play this stock if I'm not saying it is going to get there, but if it gets between 165 and 168, meaning if we come down to these lows here, guys, 171, 170, I'll probably be writing short puts, 168 down to about 165. Seems to be a good swing trade location for me. Moving on to Meta right now. Give me a quick second. All right, so looking at Meta up down about 0.16%, right? But Meta really did a great job of breaking out. Now we're looking for the follow-up trade, guys. So I've been giving this follow-up trade a few times throughout the week at this point, right? So daily uptrend is currently underway right now, looking for the daily higher low. This is a breakout of our big range of previous support. It was resistance. We hesitated there for about 3 weeks. Now we have the breakout, confirmed breakout, looking for the retest of support at around the 482 and the eventual run. So this location right here, juicy swing trade. I will be attempting it myself. As a matter of fact, if we dip here early Monday and Tuesday back into the 482, retest location, the entry is pretty much right here. Stop loss goes below these lows right here around 460, and our take profits are 530, first take profit, at next 550. So downside risk from 482 is about $20. Upside take profit, the take profit number 2 is about $50. So we're really getting about 2.5 risk to reward to risk trade on that one. Looking very good. That is my attempt on Facebook so far. So daily uptrend, very nice. And even the weekly, guys, nice weekly uptrend back in motion right now. So if next week's candle opens up with a little bit of a doji retesting this, I am looking for the continuation. That's why I'm making this trade attempt. All in all, looking very good. Moving on to Microsoft right now. Microsoft equally looking very healthy too. So Microsoft was in a daily downtrend, huge bounce by the bulls right now. Soon as this move is topped out, just gonna be looking for a daily higher low, anything above 404.65, daily higher low for the trend continuation. Same analysis as Meta pretty much. We've now broken back above the prior range of consolidation. The top end of that is about 416. So this little location right here, guys, all the moving averages are here, and our prior top of the range of consolidation, 415, could be a nice swing trade opportunity. Targeting this as an entry point as close as possible to 415. Your stop loss goes below the lows, 405 pretty much. So $10 worth of risk. And where are we targeting for take profit? 433 first exit, and then 450 psychological second exit. So from your risk, about $10 worth of risk, and from 415 all the way up to about 435-ish, let's call it $20, right? So still a 2-to-1 reward to risk trade, looking very good. And once again, we are leaning bullish because Microsoft is attempting for the weekly trend change, looking very strong. Moving on to Netflix right now. Netflix also really just hovering in this range of consolidation, right? It's been pretty much stuck here for a better part of the last I would dare to say 2.5 weeks at this point, right? So not looking too bad, just very tight range of consolidation at the top. No clear trend, what the bulls are trying to do. This is a bull flag, guys, if you jump up one time frame, right? Big move up on the weekly bull flag, looking to set the weekly higher low and get that next weekly leg higher of run up, using our prior 52-week highs as the big area of support right now for your bulls. So looking very good, guys. I love to see when the bulls consolidate above a range of prior support. Just goes to show you they're very strong. They do not want to give up the levels. And if ever we get that weekly continuation, guys, which I really do expect on Netflix, targeting prior all-time highs as next resistance, 691 all the way up to 700. Moving on to NVIDIA right now. NVIDIA continuing its slight consolidation today, right? 0.09% to the downside, big deal, right? So healthy daily uptrend right now, no secret there. As soon as the move down is complete, guys, we're looking for a daily higher low, anything above 1,075, daily higher low for further trend continuation. Where could the first stop be? Prior resistance, gonna line up with the 12 EMA right there. And you know, NVIDIA really loves defending this 12 EMA, at least when it is in a clear daily uptrend. So that is to be seen if they can maintain this daily uptrend. If for whatever it's reason, guys, we roll over below, right? Just gonna be looking for very healthy weekly consolidation, anything above 758. Just gonna be looking for that weekly higher low for further trend continuation. Trade opportunity for me personally, have to see as close as possible to 1,050, guys. I don't believe we get back to the prior all-time highs. That will be a heck of a drop, right? Talking about 21% drop. I don't think it gets down to there, but you know, maybe 1,075, 1,050 could be a little bit more manageable just in terms of a slight little bit of weekly consolidation before a next leg higher. Now, give me a quick second again. All right, sorry guys, all this talking gets my throat dry a little bit. So moving on to Tesla right now, down about 0.26%. Tesla still trapped in this range of consolidation, right? So as long as the rest of the market remains bullish, I do believe the bullish breakout for Tesla is currently on the table, right? Obviously remains to be seen about inflation and the Fed next week, but those are two big catalysts for interest rate sensitive stocks. If inflation comes down a decent amount and Jerome Powell is fairly bullish about everything too, that could be a very good catalyst for Tesla to rise because Tesla is highly dependent on the direction of interest rates. So we're looking for the bullish breakout. That will be a breakout above 183. Need to see a daily close above there to really get the daily uptrend in motion and really get out of this tightening range on the weekly, set up for the weekly trend change attempt as well. Now, on the flip side, guys, if we lose this area, well, unfortunately, it'll be daily downtrend. And at that point, guys, if we lose 168.15 on the weekly, unfortunately, it'll be weekly downtrend continuation as well. And then we will look to the lower 160 area for the bulls to really act as the last line of defense. So all in all, very muted price action. In my opinion, the way this stock will break will be entirely dependent on next week's data. Moving on to Palantir right now, cooling off a little bit, 2% to the downside after such a phenomenal rally by Palantir throughout the week. Very normal for them to have a little bit of cool off, right? But where are we? That's the most important part. Now, first off, we're in a nice daily uptrend. As soon as this move is topped out, which we're kind of starting off now, right? Loss of the hourly trend into hourly consolidation usually means that daily consolidation is underway. So at this point, any move lower, anything above $21, just looking for that daily higher low for the continuation of the daily uptrend. We are currently above a nice area of support. This second green box that I drew, guys, a more recent area of support, right? And above all of the moving averages as well. So if we do retest this lower range, guys, I do expect the bulls to play a heck of a lot of defense between 23 and 2250 solely because of the horizontal support and all the moving averages that were finally above after being largely below them now, guys, pretty much since the month of March, right? It's been a very long time. Now, needless to say, if ever we give this up here, guys, we still do have an amount of room on the weekly, which is very okay in my opinion, right? Anything above 20.5, just looking for a weekly higher low for the continuation of the weekly uptrend. And on the monthly, you guys know, why is this bigger green box here? I've been saying it for a while. Huge monthly support, monthly resistance, monthly support again. And we're just looking for the monthly higher low for the continuation of the monthly uptrend on Palantir. So if we do revisit this lower area, guys, I will once again be writing short puts, $21 down to about 19.5. You guys know the drill on this one. Moving on to PayPal right now. PayPal trying to follow up on its large 5.5% move yesterday, but falling a little bit short, up about 0.5% on the day, which is good. So now PayPal daily uptrend is confirmed. As soon as this move is topped out, you guys know anything above 62.75, just looking for that daily higher low for the furtherance of the daily uptrend. Where could we potentially get a stop by the bulls? This area right here. Prior range of consolidation right there. The moving averages are now curling up, should be curling up in the next few days into this area. So if the bulls do have a location to choose as support, I do believe this one is it before making a next leg attempt higher. Now, in terms of the weekly is still quite a bit challenging, guys, right? So we're trying to get out of this weekly downtrend, engulfing move by the bulls, right? Unfortunately, the true move is all the way up here. Yes, I know I would love to take it from down here as well, but shares did trade up here, guys, prior to your earnings, right? So that's the problem. We cannot ignore the data. So this is one move down, looking nice for an engulfing move. Still need to eventually see that weekly trend change to the bulls. Still trapped in this pretty much range highs that we've been having pretty much since the month of January, right? So really need to see a clean break of those. If we can get a clean break of those in the next couple of weeks, guys, I've already said the next target stop for PayPal is probably about $75. So not looking too bad for the stock at all. So that's pretty much everything I had for you guys. Oh, excuse me, in terms of the stock market rundown. Now let's take a quick look at my portfolio. All right, guys, so taking a look at the portfolio, you can see that we are not performing too bad year to date. Now, one little thing about today, I'm not too sure why it's showing a drop in the portfolio because I made a play on GME and it's not recognized the covered call realized profit that I did have. And it's also not recognizing the roll on the Palantir calls. So it says that I'm only up 9%, but as a matter of fact, I was actually roughly flat on today. Not really up, not really down. So it should be closer to the prior read of about 11%. So currently standing roughly around 11% year to date. Slightly trailing the S&P 500 by about 1% and also slightly trailing the NASDAQ by about 3% here, guys. This big drop is obviously the CRM disaster that happened in the account last week. But as you can see, guys, have been having a very decent week of trading and we've made back roughly half of the losses so far. And I do expect to just continue making back most of this loss, guys. And eventually we will just recapture it fully and continue outperforming the indexes. You guys have seen I've been throwing a lot more different option strategies in the account right now. As the markets are turning more and more bullish, we're having a lot more uncertainty catalysts lifted out of the markets month by month. And that's when I really start activating a number of other strategies that I use, such as defined outcome strategies, right? So long calls, debit spreads. Usually I don't do those in a very choppy or uncertain market, guys, because it's either you win or you lose 100% of the expected value, right? They're defined risk trades. The reason why I always run short puts is because they're not 100% defined. If you get assigned, it's not as if you lose everything, right? But on a debit spread, let's say, if it ends under one of your two strikes, depending on what type of debit spread you're playing, right? Well, you lose the entire position. And usually I only go for those defined risk plays like long call options and debit spreads in a market that is overall bullish, in an overall bullish macro environment, which we're getting more and more of right now. So expect to see more strategies like that on the way. In terms of the positions, guys, not much has changed, but I did open a few new positions here today. So SoFi, we opened the $7 calls for next week. We did those yesterday. So yesterday, pretty much in or around the close, we wrote for 17 cents. Very, very healthy, guys. That's over 2% for 1 week of trading. I will take that every single time. My average cost on SoFi right now is probably down on this newer set of shares, is currently down to about $6.75, $6.70. So we are currently doing very well on SoFi. We'll see what happens with this one next week. It is still currently around the $7 mark, but I am eventually expecting a little bit of a breakout on the stock. Now, second, guys, we do have Palantir rolled calls as well. I know it says $1.37 here, but that's just because I bought back calls that were in the money and wrote them 1 week out. Essentially, I got a 15-cent credit for next week. So just over 0.5%, still decent. And I'm surprised, guys. I have the 22s, right? And Palantir right now is currently trading at about 23.30. Usually, you don't find much premium when the stock is so much above your call price, right, at $22. Usually when we're so far above, you can't find much premium, but I guess because of the increase in volatility, I was able to get 15 cents. So once again, we will continue rolling these calls and continue getting more and more premium for our Palantir position. If we get called away next week at 22, our average cost on Palantir right now on these 600 shares is around $19.35, guys. So very, very nice. We're currently up, for all intents and purposes, $2.65 a share on 600 shares, which is roughly around like $1,350 for a couple weeks. Pretty much being in this one for about 3-4 weeks of trading. Very, very easy trade to say the least. Now, a lot of other trades ended worthless today. The AMD 157.50s, we get all of this $130 in premium. Very good trade there. CELH as well that I opened pretty much early on in the week that I told you guys about. That as well ended worthless, so we collect all of the premium there too. Our Amazon 177.50 calls that we wrote earlier on in the week, I jumped the gun a little bit on this one. I was sure that Amazon was going to get back above the 180 mark, but obviously, guys, you can't speculate, right? If you do see adequate premium in relation to your strike, this is over 1%. So yes, if I would have waited maybe for Amazon to come back up into the 180s, then I could have gotten more premium on covered calls. for sure. But it could have also went the other way, right? It could have came down 175, 174 and closed around there this week. Nobody knows. So the best you can do is at the time with all relevant information, not wanting to speculate, if you see over 1% premium for covered calls in a week, I'm going to take the trade every single time. So now we are called away on Amazon. You can see right here, our average cost on Amazon after being assigned at $177.50. We got assigned last Friday. We got a nice little, call it about 75-cent credit. And now we collected about $190 for these covered calls right here. So total profit on this one was about $260, right? About 1.5% for pretty much holding this, being in this trade for about a week and a half at this point, right? So very, very good. Very happy with the way this one played out. A couple other closing trades, Square 62 puts, Square obviously ending well above 62. So very, very easy trade to say the least, 65.10 closing price of Square. So those will end up pretty much worthless as well. And then we did have some Square $68 calls. It didn't close at 68. So we get all of this juicy premium as well. My average on Square right now, probably in the $66 range. So getting even better every single week. And then we wrote a covered call for next week, guys, for 66 cents. So once again, getting close to 1% in weekly premium. Is Square going to rally into the $68 range next week? I don't know, guys. The technical setup looks good for the daily trend change attempt, but it could also not do it. That's why I say you have to trade essentially what's in front of you, right? And when I see 66 cents for a $68 strike, which is almost 1%, I will take the trade here, guys. And if Square ends under 68, we'll do it again and keep farming premium, bring our average cost lower and lower and lower and lower. And then eventually when it does pop back above our $68 strike, we get to collect all of this acquired juicy premium. So now that's pretty much everything for those trades right there. As you can see, I still have my Amazon Leap call, still have a CRM call option for June 28th, the 295s. Almost worthless, guys. I'm just leaving this here in the event that CRM gets, back maybe above to 250, 260 with a couple weeks of trading left. Maybe I'll be able to get $1 on these, right? But I'm not going to close these for 20 bucks, right? They're already pretty much fully worthless. The Leap call, I still have that one as well. Didn't get rid of that. That's the one that I'm riding probably through next year. We're going to try to recapture all of this lost money and more to make back the money on the short put that we lost last week. And obviously we do have Tesla calls as well, the 185 calls, banking on that Tesla breakout to the upside. We do have the shares of Intuit as well, right? Shares of Intuit. And we do have one play on Intuit. Where is the play on Intuit? I don't know why it's not there, but we should. Oh, it's right down here. The Intuit bull put spread, right? So put credit spread on Intuit for about 654. We wrote that when an Intuit was around 570. Intuit is a bit higher right now. Still not much premium has come out of that spread trade right there. I would say if I close it right now, I'd maybe be able to get about 20% profit, but I'm looking for about 50% profit. So when I see about $300, $325, I'll probably take the profit on this one. Usually I don't hold these to expiry all the way through June 28th. If I can get 50% before that, perfect, I'm out of the trade. Now, the one that I haven't talked about, guys, GameStop. So leading into GameStop, guys, right? GameStop, this one was really just a little bit of a speculative gamble for me, right? Nothing more than that. It's not like I'm making a fundamental analysis trade or anything, right? Pure speculative trade. So I'll tell you guys what happened and where I bought the shares. So leading into the live stream right around here, right? He was supposed to go live at 12 p.m. So I took a gamble on GME shares at the $38 mark. The stock at that point was already down roughly 30% on the day. So I went with $38 just in the event that we had a little bit of a pop. Now, what did I do immediately? You guys will see this right away. And this is why I want to show you the timestamps of these trades right here. So you can see I bought at 11:41, $38 flat, right? What did I do? The exact same minute. I wrote covered calls because the covered call premium on GME, guys, is so juicy. I wrote $38 covered calls for the same day and got $5.40. That instantly brings my average down to about 33 or rather 32.60. Now, my mistake was that Interactive Broker puts a 90% take profit order on all trades. And unfortunately, when the stock dropped, I forgot to erase it, guys. I really wanted to ride this pretty much to nothing, right? And collect all of the premium in one day and bring my cost basis down tremendously, right? That's a huge premium bump in one single day. So when I saw the stock drop, what I decided to do is we decided to also write the 29.5 calls. This was a little bit dangerous here, guys, since the stock was dropping, right? And I still had the $38 calls open. This was right here. So we were pretty much at this point, we were all the way down here in the trading session, right? And I still had the $38 calls open, naked pretty much, for the rest of the afternoon, 3 hours of trading. I went with the risk. At the same time, I opened the $29.50 calls for next week, which gave me even more premium. Take a look at this here, guys. 1:23 p.m., $6.30. At the time, these were at the money, $6.30. So my total premium collected on covered calls for GameStop right now, you can do the math right here, right? 540 minus the 53 cents, unfortunately, that I should not have lost pretty much, but that's just the way it is. Forgot to do it, and that's what happened. 487 net credit on the first set of covered calls, and now 630 on the second set of covered calls. These ones are for next Friday, right? $11.17 off of my 38 buy-in. So minus 38, our average cost on GameStop, guys, is $26.83. After buying it at 38 the same day and running 2 sets of covered calls, just because the implied volatility is huge and the call premiums are so juicy, we're down to about $26.83 average cost on GameStop. Now, next week, if we open down here lower, maybe $24.23, these $29.50 calls may only be worth $3 or something like that. At that point, I'll probably again write the at the money wherever we are, guys, 24, 23, and I'll collect even more premium. My goal is to just farm covered calls on this sucker as much as I can, since the premiums are so juicy for covered calls, and just lower my cost basis. Lower my cost basis as close as possible to $20, right? If I can make a couple $100 from this trade mishap, right? Because obviously I was banking on the share appreciation thereafter, and I would have been very happy if we ended above 38 today. I would have gotten $38 plus the $500 on the covered calls. I would have been chilling, you know what I mean? I would have made pretty much $500 in a day. That would have been a very juicy trade. But since it went against us, we have to manage the risk. So I'll stay in this trade here, guys. I'll try to get our cost basis down as close as possible, about $20, right? Which is the level that Roaring Kitty is at. I mean, guys, if he can hold $300 million in notional value of exposure, I think I can hold $2,600 in exposure, right? So I'm just taking this trade. It's just a little bit of a fun trade for me, right? If we lose a bit of money on it, fine. We tried to make an attempt at it. It didn't work, and that's just the way it is, right? Don't expect me to be trading GameStop crazily, right? Usually I don't go for these plays because they're a little bit risky. I may throw, sometimes I may throw a bit of shares. I didn't do it most recently, guys, just because, if I was on my own, I'll be very honest with you guys right now. If I was on my own, I probably would, but since it's I can do this in my private trading account, but I want to be the one that's public to you guys. I want to showcase all the positions, because the trades that I take in my personal account, I largely try and replicate most of them in the trading account, because I want to, it's an educational channel over and above everything, right? I'm trying to teach consistent trades. And when we start mixing in consistent option strategy trades with risky gambles every now and then, guys, I just don't want you guys to get the wrong idea, right? So I don't want, being a public figure now on the channel, I know I'm not a big channel by any means, but I just don't want anybody to lose money, guys, on these trades. I know not everybody has a very large account size, and I just don't want anybody to take trades on any money that they can't afford to lose on companies that they don't have high conviction in, right? I know it's a big meme trade right now for the whole sector. I know you can possibly make a lot of money, guys, but it's very possible that myself and Roaring Kitty and everybody else also loses money, right? There's always risks involved in these trades. That's why I don't publicly showcase a lot of these trades, and that's why I don't, I'm not going to open a $2,000, $3,000, $4,000, $5,000 position, even if I can, even if I have the bankroll to do it, guys. I really don't care, right? But it's just for you guys. I don't want to overextend, and I don't want to kind of get into the habit of going for home run trades on the channel, guys, because my whole strategy that I try to show you guys on the channel is to not go for home runs. Right? I try to go for base hits, right? We can go for a double base hit, right? Or a triple, but I don't usually go for home run trades. The most you'll see me do are maybe 28, 45-day call options on strong companies that are at big areas of support, right? But I don't really go for the home run trades for any meme trades or maybe extremely low penny stock trades or stuff like that, right? So hope you guys understand. So that was my explanation behind the trades on GME, and I pretty much showed you guys all the rest of the trades. So that's pretty much everything I had for you guys today. As I said, subscriber request video tomorrow, probably going to be about 40 minutes long. So hopefully you guys enjoyed the video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you here. Do these videos every single Monday to Friday. So I'd love to see you you back. And then obviously, guys, if you have any questions at all, stocks, technical analysis, options trade that you're considering, anything you want at all, leave it down below in the comments. And you guys know I usually get back to you guys within the first 24 hours. So take care. I'll see you a couple of times this weekend, tomorrow for the subscriber video and Sunday for our top 5 options video. So take care, guys. Have a good weekend. Peace.